She provided she provided training on entrepreneurship and small business taxes for the Silver Spring Chamber of Commerce, BNI, and CPCUG, entrepreneurs and consultants. She's a lifelong Marylander, born in Baltimore, grew up in Columbia, and lives in Silver Spring, Maryland with her husband and dog and their American Bulldog. Jina, thank you so much for being here and talking about the nuts and bolts of the sole entrepreneur. And I will put in everybody, because the timing here today, Jina has put together a site where you can ask questions if you want to, and I'm going to put that link in the chat so that if you have any questions for Jina, just put your question, send your question to that particular site. I'm screwing this up. I apologize. Let me stop. We have a link for you to be able to ask your questions, Jina, today. And I'll put that in chat. I'll also send that again to you tomorrow evening. Jina, thank you for being here today.
Yeah, sure. Thank you so much for having me. Just doing a sound check. Thumbs up. Y'all can hear me?
Yep, we're good.
Thank you. And you can see my screen. Yesterday,
yes,
my Zoom was crashing. I had to reboot. So if all hell breaks loose and I just disappear, I'll be back. Just sing songs while I'm gone. How about we do that? So it's interesting. Shira, thank you so much for that presentation. I made a ton of notes that I was writing down absolutely about reinvent yourself, because I am a CPA. And I had a CPA firm for 17 years, and it was something I was passionate about. Don't hold it against me. Yes, I was passionate about accounting. I was actually specialized in tax right down in downtown Silver Spring. And I started off exactly the way that Shira was talking about. And so what I'm going to walk through today are, what are all the things you should be thinking about if you want to start your own business? And by business, it doesn't have to be big. It can be relatively small. It can be just you contracting on the side. I wrote down the questions: taxes, legal liability, no capital, lost income as we get started, paperwork, health insurance, self-management. Okay, so those were the things that so many people wrote down in the chat. And I experience all of those things. How did I start my accounting firm, for example? I had one client and I was doing their taxes. And I subcontracted with other CPA firms in the area so that I could eat. So 1099 subcontractor for CPA firms. I did tax returns for a CPA firm. And I was hiding there, if you will, because publicly I had my own accounting firm with my whole one client. And then I asked those people, my client, for referrals, and then they referred me and I had 2. And then they referred me and then I had 4. And you look up a year later and I have 25, and then eventually an entire CPA firm. So what I want you to do is think about your company and what does it mean? Because how you structure your company, we're talking technical, but what you're doing for your job, what you're doing for a living, what you're doing in the business, it doesn't matter. Now, the reason I started with boxes in this picture is because I want you to think. Shira was talking about I like writing. I'm going to be a writer. I'll offer writing services. Or Pat, who happened to be an accountant, which is fantastic. You have the business. The business entity is what is actually legally existing. And so that's what I want to walk through. What is the entity you're going to be? And then how do you get that started and set up? And Lord knows there's going to be a lot of questions. I get a lot of questions in this space. I've provided a link. It's right there in the chat. You are welcome to click this link and send me a question offline, and I will answer it for you offline. Put it in the chat here. I'd rather answer questions as we go along. So I'm encouraging you to do that as well. So what kind of business do you want to have? I now know I'm Pat. I'm going to provide these coaching services that Shira was using in that last example. Should I do it as an LLC? I heard I should create an LLC. So LLC is a limited liability company. We're just going to use LLC. Or what if I'm a sole proprietor? I decide I don't want to be a formal LLC. What the heck is a sole proprietor? Or wait a minute, should I incorporate? I heard I should be a corporation. So here's the thing. It doesn't really matter necessarily which one you pick. What's important is to understand the implications of which one you pick. And understanding those implications might then help you decide. I have these things switching all around because at the end of the day, you could be a blue box, you could be a pink box, you could be the one with the green bow on it. Structure is nothing more than that. It is the vehicle or the entity that is doing business. So here's what I mean by that. And I live in Maryland, so I'm using the state of Maryland as an example, but these same principles apply in the District of Columbia, in the state of Virginia. And I've done, from my experience as a CPA, I had clients all around the country. Each state has a different way of doing it and different form names, but the fundamental structures stay the same. So depending on the type of box, sole proprietor, LLC, corporation, that box is what the state recognizes as the organization that's conducting the business. The next thing you need to think about is that the type of box you pick, the type of entity you pick, will determine, well, what tax forms do you have to file? Do I have to pay the self-employment tax? Are there any other things I have to file with the state? And then the other thing to think about is, and I saw this down here, legal liability. Different types of entities provide different levels or types of liability protection. We're going to talk about that in a moment. So when you think about it, what do I mean by this? So there's going to be three things, three types of entities. And the first one is the sole proprietor. Here's what a sole proprietor is. It's Pat's coaching, doing business without any legal entity anywhere. It's just Pat. Pat's sending out invoices. Pat's doing the work. Pat's getting the money. Pat's filing the taxes. So it is Pat doing business as with the company name, but they're not an LLC, not an incorporated entity. So that's what a sole proprietor is. It's just me doing the work. A limited liability company is me still just doing the work, but in the name of this LLC. My firm was Etienne, what was my firm called? Etienne and Associates, LLC. But it was really just me. Eventually I had employees, but at the very beginning, it was just me. And so I'm doing business in the name of. And then the last one is a corporation. Here, the state of Maryland says the corporation is doing business. You just own the corporation. Does that make sense? I'm looking at some people, and I think some faces are like, what? But sounds like people are following along. So let me put some comparisons in here then. How does this work exactly? So for the sole proprietor, are you a separate business entity according to the state of Maryland? No. Are you subject to the self-employment tax? Yes. I'll talk about what that is in a minute. What tax form do you file? Well, if there's no separate entity, then I'm filing my own personal tax return. I'm just adding this business income to it. What about if I'm an LLC? Well, an LLC is a business entity. You don't have to pay self-employment tax necessarily. And what tax form do you file? It depends on structure. We're going to talk about structure for tax purposes in a moment. So you can see there are starting to see lots of different moving parts that we need to think about. And then for a corporation, we all know a corporation, right? Anybody owns stock in another company? Disney? I don't know, put it in the chat. What are the company names? I can't think of a single other company. IBM, do they still exist? If you own stock in a corporation, then it's easy to recognize that the corporation, Microsoft, there you go. A corporation is a business entity. It isn't subject to self-employment tax, and it files a tax return for itself. In this case, it's a Form 1120. So when you start looking at the different entities and start thinking about different requirements, sometimes they're similar, sometimes they're completely different. All right, so when I was thinking about what do I talk about in this session, because there's so many things to talk about. Is Lockheed Martin a corporation where you own stock? Natasha's no. Okay. Anyway, so talk about instant digression. I'll get back on track. There are so many things to talk about. And as you can imagine, as a CPA that formerly I specialized, I had an accounting firm and I specialized in tax, there are no lack of questions that people ask me. So what I thought I'd do here is I'm going to organize this around a couple of questions, and hopefully this will answer some of the things that I'm starting to see come into the chat. So the first one is limited liability. Does an LLC protect me from, I'd be curious, go ahead and type in your answers before I reveal them. If I form an LLC, that means I'm protected, right? Because this is the single biggest question that people say, well, I'm going to form an LLC, so I'm protected from liability. Some people are saying yes, somewhat, wrong. I'm going to go with somewhat because the answer is maybe, but probably not. So let me explain to you why. And this is a very simple example. I've run this by a couple of attorney friends of mine, and I've confirmed that this description hopefully creates clarity. So let's say you're a painting company and somebody's going to hire you to come in and paint their house. There are a couple of roles you can play. It's just me, myself, and I don't have any employees. And so I am the one actually doing the painting on the wall. And I broke a priceless vase. Your customer's going to be pissed. They're going to sue you. That's $1 million vase you just broke. Doesn't look like $1 million vase, but humor me. So are you liable then? Can they sue you? Because here's what happens. If you lose $1 million lawsuit, you just lost your house, right? Unless you happen to be a spontaneous millionaire and you're just doubling as a painter. So are you going to be liable even if you have an LLC? What do you think? I'm going to look in the chat, or you could just nod because I can see most of you. Yes, you're going to lose your house even if you have an LLC, because you can't protect yourself with an LLC for the things you personally did. I personally broke the vase. I have that liability. Okay, but what if, let's take a different role. I'm not the person doing the painting. I'm the person supervising the job. So I show up at the house. Do you have all your supplies? And do you have everything you need? You're on schedule, da, da, da. You good? And then I leave and I go supervise another job. Come back and find out that one of my painters broke a priceless vase. They're going to sue the painter, but can they sue me? I wasn't painting. And the answer is probably. You are most likely they're going to sue you because they're going to sue the painter and they're going to sue the painter's boss. Oh, and here's the thing. What if you are actually just sitting back at your desk? You have employees. You sign the contracts, you're paying the utility bills, you're the one going to those networking events. Are you going to get sued? Probably, even though you have an LLC, because you can't protect yourself from the work you're directly involved. As you get further and further away from being the person who had their hands on the vase and broke it, the likelihood of you being sued is less, but it's still there. So here's the thing. How do you protect yourself? And I saw somebody in the chat already put the answer. Dun, dun, dun. Insurance. Insurance. Yes. Somebody said, yes, you win the cookies. Like if I had cookies and I could give you cookies, you would win the cookies for the prize today. The type of insurance varies. As a CPA in a practice, let me look on my slide. I had business interruptions insurance, errors and omissions insurance, professional liability insurance. I owned a car in the name of my company, so I had commercial auto insurance. I think I had all of these types of insurance. Insurances are going to vary based on your industry and what you do for a living and what your services you're going to offer. So you're going to want to think about. It says, can't you get insurance for a company? And I think that answer is yes. These are insurances for me as the business owner, insurances for the LLC itself. It gets insurance, just like Microsoft buys insurance for the company. You might buy insurance for your LLC. So when we talk about limited liability, it isn't necessarily what we think it is. You could still be liable. So that's what's important to understand. Next question I get is, do you need a separate bank account? Well, the answer again is it depends. Let me just cut to the chase. Anybody who ever asked me a question as an accountant, you know the answer? It depends. That's the universal answer. It depends on what? Business structure. When we're talking about how to set up your small business, it's going to come down to business structure. So do you need a separate business account? It is a best practice whether you have an LLC or not. Now, if the LLC or corporation exists with the state, then what you're going to want to do is it's going to have its own bank account. But if it's just you, you haven't formed a corporation, you haven't formed an LLC, I still highly recommend you keep your business and your finances, your personal and your business finances separate. Otherwise, talk about somebody put down here paperwork, you just created can I say hella paperwork? Can I say that? I just did. Okay, so here's what I mean by that. We're going to talk about the proverbial shoebox and how we do accounting. So the first thing is what goes into the shoebox? That's income. Now, what's taxable, by the way? Yeah, everything. It's right there. Everything is taxable. This is true whether you own a business or not. That's exactly right. Somebody said avoid commingling your dollars. If you found $1 on the street, the IRS says it's subject to tax unless you can prove otherwise. So if you put money into your box, it's taxable. When is it taxable? When you get it. Somebody can Venmo you, PayPal you, Zelle you, write you a check, give you cash. When you have the money, it is income to you. And if you take a personal checking account and put your business income there, you're putting your partner's wages and salary in there, you're putting your dividend or investment income in there, you're taking cash and transferring it from your savings account to your checking account. You have all these inflows of cash. You know how much paperwork you have to do now to remember which part of that is business income? So separate bank account. Now, what are the outflows? The outflow presumably is an expense. So what's deductible then? The answer is nothing. So everything is taxable unless you can prove that it's not, and nothing is deductible unless you can prove that it is. So these are like the basic rules of what do I need to be doing from an accounting perspective. If it is considered a business expense and it's deductible, when do you get to claim the deduction? When you pay it. It's not rocket science, but I think some people think about it from a confusing perspective. So you think cash in, cash out. That's what I want you to think about. Cash in, income, cash out, expense. Okay, now what do I get to deduct? Because this question comes up a lot. This is the part that can be uncomfortable for a lot of people because it requires us to think about it. There's no pre-existing list of what qualifies as a deduction. First of all, different industries. If I am selling on Etsy or if I am providing coaching services, there are going to be very different types of expenses that I'm going to pay. If I'm providing coaching services, I probably won't do a lot of FedEx shipping. But if I'm doing stuff on Etsy and selling, I'm probably doing a lot of FedEx shipping. So you're going to see the types of expenses and the volume of those expenses will be different. So then how do I know if it's deductible? Well, there are two standards according to the Internal Revenue Service. Just for fun's sake, it's code section 162A, but you don't need to know that. But it's funny because it's the highly cited code section. What this code section says is in order for things to be deductible on your tax return as a business owner, it must be both of these things. Somebody says tax law changes and defines deductions. Yes, tax laws change constantly. This code section doesn't. The code section that says what's deductible, it has to be ordinary, which is the kind of expense you would expect to see for that business. And then necessary. You needed to spend this money to move your business forward. Do you need to pay for the internet in order to do business? Then it's a business expense. Is it pretty common that companies pay for the internet? It's both ordinary and necessary. And so when you're trying to think about, do I get to deduct this? These are the questions you have to ask yourself. Now, there are some little janky rules that you have to think about that might determine one thing or another, whether or not it's fully deductible, partially deductible, the timing of the deduction. Some of the common things I thought about were here on the left side. If anybody has any other types of expenses that they're curious about, drop them in the chat or use that form that I provided and submit a question to me later. But here are the things. There are some things that have little special rules. These are the classic red flags that you want to think about. Meals. You and I meet for lunch. I offer to buy lunch. That is called meals and entertainment. It's like a networking thing. I'm not eating. Well, I can't just buy food and eat it at home. That's, even though I'm working right now, it's personal. But if I treat you to lunch or dinner, that's entertainment. I only get to take half of that as a deduction, for example. Insurance, disability insurance is not deductible. So there are certain types of insurance we need to think about and know whether or not we can deduct it. So this is a funny rule. Taxes, not all taxes are deductible. You need to understand that. Use of your car, complicated, very complicated. I can't even begin to explain it, but let me tell you this. Generally, no, unless you can understand those complicated rules. Home office expenses, really complicated. So you're going to want to know that these are complicated. When you talk to somebody to get more information, ask them to explain it in the context of your situation. Just what I want you to know is you don't get to just write it off. There's some rules to think about.
And Jana,
Yes,
I'm going to ask you a question. So all these rules are based on tax laws. Is that correct?
correct.
Okay, so as those
Correct.
tax laws changes, then, so that was one of the questions in here as well. And the link right now is not currently working, but I'm sure that will be resolved after the expo, and I'll let everybody know if there's a different link that we'll provide for after expo questions for Jana.
I will, once I'm done, I'll pull up the link, drop it in the chat, make sure you have it as well in case there's something funky going on with it.
Thank you. And then we have another question about someone can't decide what type of business is set up. What is the most important factor to consider when deciding? And then I'll let you go
Yeah,
on.
that the challenge with that question is, what did I tell you all the answer is going to be? It depends.
Yeah.
The reason people choose an LLC versus a corporation or choose not to do it most of the time is because of perceptions around limitations on liability. But we now know that if you're the painter and you're touching the wall and you broke the thing, I don't care if you have an LLC, I don't care if you have a corporation, you can't get out of that liability. So understanding the liability is the single biggest question for you on the type of entity. Somebody asked about what's a major expense. A major expense might be something that is $5,000. It's going to depend. If you make $10,000 in a year, 500 is a major expense. If you make $100,000 in a year, 5,000 might be a major expense. But a major expense, you might have different rules apply to how much of it you get to deduct at any given time. Again, all of this stuff is kind of complicated. So all I wanted you to understand is that there are actually rules out there that talk about this stuff. That's what you need to be aware of. So now you are informed enough to ask questions to learn more. Where people get into trouble is that they don't even know these rules apply. And the person they're working with doesn't explain it. And next thing you know, you find out, you mean that's a thing? I wish I had known. It took me a long time to understand and specialize in taxes. And I would not expect any of you to be able to understand all of it. What I want you to do is be an informed consumer when you go and meet with an accountant. If you go and talk to a tax preparer, they should be able to explain to you the whys and the hows in a way that you understand. Because until you understand, you put yourself in jeopardy because the IRS, if something happens, they don't care that you had a tax preparer. You are still the one that's considered to be liable for anything that's on your tax return. Even if you said, well, but my accountant said, IRS doesn't care. So this is why it's important for you to understand just the fundamentals. So cash in income, cash out expense. Most of my expenses are probably deductible because most of us don't run around spending money for fun. We are spending the money so we can make money. business expenses, take them out of your income. If you have a profit, you're going to pay tax. Nobody's surprised by that. If you have a loss, I made it a credit card because you're borrowing more money than you spent. Most of the time you can deduct that loss, not always. So this is another question you have to talk to your accountant. Well, when do I get to deduct the loss? Just know you have to ask that question if you're in business. Now let's talk about self-employment tax. Oh, and by the way, Anne, I want to go back to your question about the tax laws.
Mm-hmm.
When you take a business, when you're trying to figure out whether the tax laws have changed or not, the fact that your business expenses are deductible if they're ordinary and necessary has never changed as long as I've been in practice, and I graduated college in '89, so it's been a minute. That fundamental law hasn't changed. What does change over time is how we interpret the law. Okay, it's just got even more exhausting. But so what's important to know is that the context changes, expectations change, but the fundamental rule doesn't change. Think of it this way. If you go to the doctor and you broke a bone, the fact that humans break their bone, it hasn't changed. But what might have changed is the material they use to cast the broken bone. Do they put pins in there? Is it whatever that stuff is? Plaster, I think it is. Do we put it in some kind of a pressure cuff? Like, processes of doing things change, but the fundamental thing hasn't changed. If that hopefully makes sense. How do you find an accountant? Hard to do. Reach out to me separately because most of this stuff is done by referral, and this is tough work to do. It's tough to find a good accountant. So what about self-employment tax? I do want to make sure we touch on that. I'm looking at the time. Looks like I have time. So self-employment tax. Well, we all know Social Security, right? Who doesn't know about Social Security? That's something all of us have paid forever. And so Social Security, what we might not have known is it's actually made up of two things. When we call it Social Security, part of it is the Social Security system, and part of it is paying into Medicare. Those two things together, the total tax is 15.3%. Every person in the United States of America who is earning income will contribute 15.3% of that earning to Social Security. That's what we call generically FICA. But here's the thing. If you are an employee, you didn't notice it for two reasons. One, it was withholding out of your check. Has anybody ever been an employee? And when they said they're going to get paid $2,000 per paycheck, actually got $2,000? Or do you get something like $1,500 because they're withholding all of this stuff out of your paycheck? Well, part of what they're withholding out of your paycheck, ding, 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 Social Security. But there's an even better catch, because with Social Security, you only have to pay half when you're an employee. Your company actually pays half. So while the tax rate has always been 15%, you've only been paying about 7.5%, and your company is paying the other half. So let me show you what this looks like. This is an example of a paycheck. We've all seen a pay stub. You've got your gross wages on the one side, you got with your withholding, and then in the bottom right corner, they made $2,000, but the take-home pay is $1,500. This sounds familiar, right? In addition to this, they might be taking out like your federal income taxes, your state withholding, your health insurance, your contribution to your retirement plan, like all kinds of things come out of your check. Well, let's look at what this means from a FICA perspective. So your employer takes $153 out. They pay $153 to match that amount. So the total amount that's going to Social Security when you earn $2,000 is $306. That's the total. But what happens when you are self-employed? We call it a FICA from an employee perspective, but when you're self-employed, guess what? It's the same tax. You still have to send in a portion of your income to Social Security like everybody else does. So what was previously FICA is now considered the self-employment tax, and you pay both halves. Think of it, self-employment is easy. The employee side of you pays 7.5%, and the employer side of you pays 7.5%. You get to pay both sides. Oh, joy. That's how the self-employment tax works. So let's compare these two side by side. In the employee example, the total was 306, right? You paid half, your employer paid half, 306. But now you're a sole proprietor, you're a small business, you make $2,000, you're going to pay Social Security, you're going to pay Medicare. You add those two up and they shockingly equal $306. The difference here is when you build your client $2,000, how much are you depositing in your checking account? That's not a trick question. $2,000. When your employer paid you $2,000, how much you deposit in your checking account? $1,500. So that means that if you earn $2,000 and you're going to give the government $306, friends, may I suggest to you, for every dollar you make, pull out of that dollar, I'm going to go with 30 cents, set it aside, and think for every dollar you've billed, you've only made about 70 cents. Because in addition to Social Security tax, you're going to pay money to the IRS. You're going to pay money to the state of Virginia or to the state of Maryland or to the District of Columbia. That's called our income taxes. We all have to pay it. The difference is when you're employed, it all comes naturally out of your paycheck. When you're self-employed, you have to withhold from yourself. It's a simple way of looking at it. It's a pain in the butt. Nobody tells you this. And one of the biggest things that used to happen when my clients would come is they would be shocked to find out that after the fact, you mean to tell me I have to pay this much money in taxes? They've already spent the $2,000 thinking that they made $2,000. So this is the one thing I want you to think about. If you hear nothing else from me, you're going to start a business for yourself, whether it's an LLC, a corporation, what have you. When you earn income, you are going to have to send the government some of that money in the form of taxes. And there are lots of different kinds of taxes. So you always want to set some of the money that you've earned aside so that you're prepared to pay those taxes. Coming up with the money after the fact, I can tell you from personal experience, is a very painful process. Very painful. Another question I get, this one doesn't take a lot of time. A lot of people think, I'm going to start a business. I don't need to hire employees. I can just get some 1099 contractors if I need help to do the work. And the answer for the most part is going to be yes, except if your business becomes bigger and you start really depending on a subcontractor to work for you to the point where you have them working for you on a regular basis, on a regular schedule, they are working under your supervision. You might have them going from just an occasional 1099 to essentially an employee. You have to know when that happens because requirements for you change. Talk to an accountant about that. What was the estimate of how much to save for taxes? I would recommend you set aside 30%. Now, if in case I wasn't clear, you take your income. Let's say my income in this case was $3,000. Take out your expenses. Let's say my business expenses were $1,000. So what did I end up with my net? $2,000. How much do I pay tax on that? 15% to Social Security. Let's throw in another 15% to the IRS and to the state. That's how you get to your 30%. So that's ballpark. Somebody says, while collecting Social Security and adding additional self-employment. I'm not sure what that question means. So if you could type it in again, that would be helpful to understand. Next question. I heard I should be an S corporation. Is that true? All right. This question has already been in the chat a couple of times. So I wanted to very briefly explain a very complex structure. First of all, an S corporation is a tax construct. It is not its own entity. It is a form of tax, how taxes get paid. So what happens is an S corporation, a business says, hey, I want to be treated as an S corporation. And the IRS says, okay, now you're officially going to be treated as an S corporation. When you do that, the company sends a report to the IRS and says, here's all the money that the company made. And then they send a report to the business owner. By the way, that's you sending the report to the IRS and you making a record so that you can send the report to yourself that says I made $2,000. And then I personally say to the IRS, I'm going to put that income on my tax return and I'm going to send you the tax on behalf of my company. It is a highly complex structure. Don't assume, oh, I should be an S corporation, because so many people do that. They just think, I'm going to be an S corp, and then that's it. The advantage is around avoiding the self-employment tax, which is true, but there is a catch. I can't begin to explain it here. Just know that an S corporation, while beneficial, usually doesn't make sense until your income becomes significant. And by that, I'd say $100,000 or more profit subject to tax. And until you're at that level, it might not make sense to be an S corporation. Talk to an accountant, ask them to walk through the pros and cons. I'm happy to explain it to you. I'm always happy to hop on a quick call and answer something. I'll make sure you have that link that's working. Then the last question is, if I'm not going to be an LLC and I'm not going to create a corporation, it's just going to be me, I'm going to be a sole proprietor, do I need to register with the state? Is there anything I need to do? And the answer is maybe. And that is, state of Maryland anyway, does have something called a trade name. And a trade name is you send a paper to the state of Maryland and say, you know what? I don't remember the name of your company, Shira, but I'm Pat, and I'm going to create a company called Pat's Coaching. So I want the world to know I'm doing business as Pat Coaching. I want the state of Maryland to recognize the name Pat's Coaching as a business is me. So you file a return, you file a form at the state of Maryland claiming that name. Now, what I have done, and you're going to see it in the handout that you get, I have put what these forms look like on any one of these forms in the PDF. All you have to do is click on the picture and it'll take you to the form. There's a hyperlink down here. I've also included for you some other links if you want to go get information. This is all the state of Maryland. So if you need something in Virginia, you can let me know. This is in a section called additional resources in your handout. So I've put all of that information there so that if you are interested in looking at the trade name application, going to see how do you create an LLC, there is a checklist that the state of Maryland has in getting a business set up. I've also put a simple checklist here. I've not walked through this in any meaningful or significant way. So I wanted you to have this information. But at the end of the day, what I really wanted people to think about is understanding that the business entity determines what you have to file, how you're going to pay your tax, what type of liability protection do you have. And everything else comes from there. A sole proprietor, let me come back to this slide here. A sole proprietor files a 1040. An LLC, it might file as an S corporation, it might file as a C corporation, it might go on your personal return as part of your 1040. That is very much, it depends. And there are a lot that it depends on. Talk to an accountant. And if you're a corporation, you are a very clearly defined separate legal entity. It files a tax return. You own it. It files the tax return. Do you own stock in Microsoft? You own a piece of it. It files the tax return. I own stock in my company. I own it. It files the tax return.
And Jina, a corporation doesn't have to be owned by shareholders, right?
So if we're going to talk about technical terms, legally, the owner of a corporation is a shareholder. That is the language. An owner of an LLC is called a member. I don't know who came up with that term, but a member owns LLC interest or units. Corporation shareholders own stock. Complicated. Partners in a partnership are partners. And a sole proprietorship is just you, maybe doing business as a name, but it's just you.
And the question about the Social Security, if we're currently over 70 and taking Social Security, do you still need to pay the 15.3%?
Yep.
What?
Easy answer. Yep. You're contributing to Social Security while simultaneously collecting it. You owe Social Security because a percentage of earned income always goes to the government. Period. Social Security system is funded by everybody who's earning an income, taking a piece of that earnings and sending it to the Social Security system. I wish I had a better answer, but it's
No, that's cool. This some may or not be able to answer here. While collecting Social Security and adding self-employment, what is the best method to try to calculate estimated taxes owed?
so estimated taxes. Remember we talked about you made $2,000 and your employer takes out some of it, right? They send all the money wherever it needs to go, and your take-home pay is $1,500.
Right.
Part of what they're taking out is what you're going to think you're going to owe to the IRS. So they take a little bit and send it to the IRS, they take a little bit from Maryland, they send it to Maryland. And then at the end of the year, you file your tax return. And then you have what's called withholding. The government, you look at your forms and your forms say you owe $1,000. And then you look at your W-2 and your employer says, oh, we already sent in $1,200. So what are you going to get? A $200 refund. Exactly. But when you're self-employed, you have to know you're sending that money in advance. Sending the money in advance is what we call estimated taxes. So you estimate your taxes, no pun intended, and then you send it to the government. You're required to send in 4 payments. They're called quarterly installments. I'm going to roughly say 25% each. The best you can do is try to do a best guess and send it in. If you fall short, you can pay the difference when you file your tax return. If you pay too much, you get a refund just like anybody else who's put too much money into the system. You do that for the IRS and you do that to the state of Maryland.
And is there, and thank you for being here this morning. Greatly appreciate it. And the link, if you would be able to look at that and then send that to me later, and then I'll get it to everybody so that there could be any after questions. The question I wanted to ask you is there a sort of a guidance for what type of insurance you should have beyond, for you're a sole proprietor or LLC?
So the type of insurance you get depends on what you're trying to insure yourself against. Just like a homeowner's insurance policy, you have a homeowner's insurance policy in case anything happens to your house. You get flood insurance because your homeowner's policy doesn't cover that. So if you're an employer, you're going to need different types of insurance, different types of insurance for different types of liability. For example, as a CPA in practice, by the way, I'm no longer a CPA in practice, I'm just still a CPA. But when I was in practice, the errors and omissions insurance was in case I made a mistake and I would be held responsible for that mistake. I mean, if I mess up a tax return, it's the same thing as if I break a vase as a painter or crash as a truck driver. My actions resulted in an error, so the insurance company will protect me. I might be found liable, but my insurance will pay it out. I won't have to pay, mortgage my house in order to pay it out.
Well,
that's just one example, but you have to know what you're insuring. You have to know the risk and then the insurance to cover that risk.
Well, thank you. Thank you to both you and Shara for being here this morning to talk about sole entrepreneurship. And I think you've enlightened a lot of us. So this has been very helpful. And I will be sending everybody your contact information and Shara's contact information tomorrow with my big email that I sent everybody tomorrow night. And the handout I did send to everybody earlier this morning. If you did not receive it, you will receive it tomorrow. And it will be posted on the website. So Shara, is there anything you'd like to say before
Yeah,
we close
so
up?
Val, we both gave you lots and lots of information. We hope at the end of the day, you're still encouraged, right, to explore self-employment. While yes, there are a lot of different factors to consider, certainly on the business structure side, there are people who can help you, right? There are good accountants